During the COVID pandemic, one industry that received a lot of attention was the healthcare industry, as one would expect. With so many people being stuck at home, coming up with solutions for healthcare was not only profitable, but necessary for the welfare of our public. While we're not going to be discussing categories like telemedicine today, there is one company that caught our eye a couple months ago, and that was Clover Health. See, ticker Clov was initially started as a SPAC called IPOC by our lovely king, Jammat Palihapitiya. While his name may seem challenging to many, his strategy is very simple. Utilize a technique called a SPAC, a special acquisition purchase company, to generate enough funds to bring a company public. And if there's enough fundamental reasoning and backing behind its purpose, chances are it will do just fine in the market. So that's exactly what we saw with Clover Health. It's a San Francisco-based Medicare insurer. The company uses AI and machine learning technology to help its highest risk members and pair them with solutions that combine hospital coverage, doctor visits, drug prescriptions, and also provides them with a holistic care plan for their needs. So usually when we evaluate a company, we look for two factors: the fundamentals and the technicals. The fundamentals represent the company's overall long-term perspective. What are they capable of today, and what are they capable of tomorrow? By understanding these two factors, we look at things like balance sheets. Are they profitable? Year on year, how much profit are they growing? Have they been adding more customer bases? Are they losing people? Those are really important because it gives you an understanding of how healthy the company is. Some companies like Tesla, for example, weren't profitable for a long time, but their stock continued to grow because investor sentiment was good. So the reason we study fundamentals is because there can be a disconnect, but that's why we have technicals. Technicals represent, in a very simple way to describe it, they represent the charting of the stock. How has the price been affected in the grand scheme of things? Does the price, jack up when there's good news? Does it fall when there's bad news? Being able to evaluate those to understand how the price is going to move for a specific stock is very, very crucial. Now, most traders will use a mixed strategy where you combine both fundamentals and technicals, but you'll find that people like day traders or even swing traders just between a few days, basically short term, they sometimes just focus on technicals. They look at the charts, it's good to go, because how it's going to perform a year from now isn't always the most important when you're trading for like an hour of a stock. So while it can be helpful, knowing the fundamentals can truly help you stay strong in a long-term position if things aren't going your way. And Clov is a perfect example. So our initial reason for entering Clov was because of a company called Hindenburg Research. They basically released this nasty report. They said that Clov was a fraudulent company. They were being investigated by the SEC and the DOJ, and they were partially right. So here's the thing. A company like Clov, they deal with something called Medicare, right? Medicare is a very commonly frauded program. If you search Medicare fraud, you will find tons of doctors from all over the country. You will find tons of patients. There's so much fraud in that program that the Department of Justice is consistently speaking to companies like Clov, checking the files, checking the logs, making sure everything's good, because if they don't check and it goes untapped, you're going to see a lot more instances of fraud. So yes, Hindenburg was right, but what they did is they twisted the truth and made it seem like Clov was a more fraudulent company than they really are, which I don't believe they are at all. Right? So Hindenburg has done this in the past. They're known for shorting stocks. They're known for sending these damaging reports. But at the end of the day, if you know how to react, if you know how to recover, certain techniques can help you mitigate those type of risks, right? They did this with a ticker called BLNK. They suppressed that all the way down to $8, and that ended up skyrocketing almost to $51. So just keep that in perspective. If you had bought 100 shares of Blink, right, at $8, you would have made this much profit, and that's not a small amount. So we saw what was basically an overreaction, and we said, okay, let's take a situation like this and let's see if we can make some money off it. So the one thing I want to do is I want to show you guys the charts so you can see exactly what we saw. So I'm currently open with Thinkorswim right now. This is the platform that I use for my charting, and I've got the chart open to show Clov ranging from December 1st right now all the way to where we are at the moment. So I really want to focus more on 2021. So we'll zoom in and I'll explain basically the type of charting that I've done, different patterns I found, so you can understand what I'm looking at, and hopefully this will help you with your technical analysis, but also help explain what we saw with Clov and why we continued to hold it regardless of the price it was at. So here's what we're going to do. Let's zoom in right here. So this right here is a descending channel. What that means is that these are two parallel lines, right? If I hover over one, you'll see the other one shine up as well. And that means that the price for Clov is traveling within this range. So if you know that it's in a descending channel, hypothetically, you could buy puts, and puts would be fine. Or you could even short it, but we don't recommend it because we don't like people who short stocks that we buy. So you can see that it doesn't have to be exclusively in there. So for example, this right here is when Hindenburg released their news report, right? So it was February 4th. And you see that because there's this huge gap down. A gap down just means that there was so much volatility in pre-market or after hours that, because I don't have it shown on my screen, there's like there's a gap between candles that doesn't show that volatility from pre-market and after hours. So what you see is, even though the stock's price falls, it's still resting alongside this bottom channel line. And what that tells you is that this is a critical point, right? So if I were to draw something like this, I mean, obviously that's not accurate, but what you can see is that it kind of built a new little base and then recovered and re-entered this channel. So you're probably wondering what these yellow lines are as well. And you'd be right to ask. So this is something called a Fibonacci retracement, and it's actually pretty easy to use. In fact, I'm going to zoom out a little bit more, and I want to show you exactly how you can set something like this up. So because we're focused on this range from about January to now, I'm going to try and find a high price point over here. So let's go ahead. I'm going to start with my retracement. I'm going to go to this candle here. And if you go to the top, you're going to see a few details about the candle that you're hovering over. You got the day of it, you got the O. I normally don't use that, but I look at the H and the L. The H represents the high of that candle period, and the L represents the low. So in this case, all you need to do is look at the H. So if I'm hovering over this red candle, the H is 1684. So I can adjust my mouse, and all I have to do is click my mouse. You know what? I'll just set it estimatedly, and it'll be a great way for me to show you. If you hit edit properties, you can just go like that. So 1684, and I can see the low is 631. I hit OK, it'll automatically adjust those, and now I've got these different price levels on my stock price. Now if we zoom in, what you realize is that on a lot of points in Clov's stock history, it actually started following Fibonacci pretty well. So if you see, right when the gap down happened with Hindenburg, Clov actually found the base on the support from our Fibonacci. Now keep in mind, the system drew this. I didn't come up with these levels, but it matches perfectly because that's just how it goes. Stocks are based on patterns, they're based on history, because that's how stocks work. So if you see, the stock fell, found a base on this 50% support line, around 1158, and bounced up, and then it failed, quote unquote, on our descending channel. So that's when it re-entered, right? Because it fell out of the descending channel, re-entered, and basically stayed above here. And when you see something like this where it's basically staying along the top line, that tells me that they're desperately trying to break through, but there has to be enough volume or momentum. And that's kind of what we see here, right? We see that the volume's been pretty stable. If I were to draw a level here, the volume's pretty much been below this level of 5 million per hour candle, right? So when you're looking at price action, you want to see, is that volume getting higher? Situation like this, right? You see how the volume basically crosses? That tells you that there's more interest. And what did you see? You saw a pretty, I don't want to say exponential, but relatively it was a strong move. It was a stronger move. And that's what it takes to break through a resistance like that. So another thing to note is whenever you see something like this where it dips and you may not have a level in the middle, go ahead and throw a support resistance line, because you don't know if it's going to matter later. But if you see, right, when it comes back, right, the stock basically hovers around that price, tests it, and then fails, and then it continues coming down. So it's always important to pay attention to the little details, because what was a support / resistance before will probably end up doing the same thing again. And that's because stocks follow patterns, and that's what makes them predictable and makes it less like gambling and more like logic. So moving forward, we exit this descending channel and we start to see a little bit of positive growth. So that's what we see here. And I'm actually going to just focus in right over here. You can see overall this is starting to be bullish. You know, there's a few mini patterns inside and out, But you can see the chart automatically adjusts itself because of how exponential this growth was with Clov. So for whatever reason, Reddit, Wall Street Bets, God bless them, they ended up finding the stock that we'd already been in for, a couple months. And their strategy has been pretty consistent. Find stocks that are overly shorted and squeeze them so people who are shorting stocks are basically closed out of their position, and that exponential growth is what makes people a lot of money very quickly. People like making quick money. They don't like making, hard worked, patient money. But in the grand scheme of things, that's what makes the most. So, at the end of the day, as easy as it was for us to make our money right back, it's important to note that it's not always going to be quick. It's not always going to be easy. Regardless of if Wall Street Bets found this stock, we would have held it until $15 to $20. Our initial target was 15, but because of the way we saw the charts moving, and if you look at the fundamentals, it just made sense. So at that point, this is when you start seeing the huge move by Wall Street Bets, right? And do you remember that line we drew right over here at 5 million for volume, right? That carried over. But look at this. Look at how high the volume was for Clov, for it to spike all the way from this range of about $11 to open around $16. That's a $5 move, and for a stock that's pretty cheap, that's huge, right? There were days that Clov was up almost 70%. So just keep that in mind. In a situation like this is what you're looking for, right? But keep in mind, right? And obviously this isn't meant to be the most accurate. So you see how the volume is overall dropping off? Think about it like this. Volume should remind you of a roller coaster. If there's enough volume in the move, if there's enough momentum, and you're going uphill, you might be able to make it over. But if you don't have momentum, it's going to start falling. And that's exactly what happens to a stock. If there's not enough momentum behind a move, that move will eventually stop happening. So because this was such a bullish move, because there was so much going on, the stock absolutely skyrocketed. But the moment it started to fall off, boom. So Clov actually ended up coming back to a price point of $15, which we believe it carries pretty well. So coming to this point, we ended up selling at about $21.80, and our initial entry was back right after Hindenburg released their news, because look, as an investor, you kind of have to do the opposite of what everyone else does. If everybody's panicking, that's when you buy. Because when people panic, they don't think as logically, right? They overreact. And what we want to do is we want to take advantage of that overreaction, because people are going to say, oh, you know what? Eventually it'll come back, right? The smart investors will end up buying. That's going to create more demand. Or when there's higher demand, the price goes up, and that's what boosts the price back up. So then people who have FOMO, who are like, oh, I shouldn't have sold, they end up buying it. So now you've got this huge trigger reaction, and that's what ends up bringing the price back. So that's pretty much what happened. We entered around, I think, $11.30 initially, and we just kept averaging down. Now keep in mind, because full transparency, because my position was so strong here and I wasn't truly expecting the downturn, but because I was also solid with fundamentals, I didn't care that much. So I averaged mine down to about $10.92 for the purposes of sharing my trade with the team that we have that trades with us live every single day. So that was my average. So many of our members actually learn techniques from us, like learning when to buy the dips, using Fibonacci to buy prices, to buy at prices that are very, very strong. So there were many members who ended up having averages of like $7, $8. So just to put it in perspective, somebody who bought Clov at $7 and sold it at $21.80 like us made over 300%. And that's amazing for the fact that you made that in 4 months. The industry average is about 8 to 10%. And that's not factoring in inflation. Really, that comes out to be like 6%. So if you can beat 10 to 12%, you're in a very strong position. So to make 300% in 4 months, obviously not using your whole portfolio, that's still very, very amazing. And that's rare, but that's what makes investing fun. It's about finding those opportunities. It's about finding those experiences. So for Clov, we felt that they really had this intrinsic and extrinsic value because of the fact that the reason their price fell was because of somebody else's shitty report. And I apologize for using that word, but yeah. So we cashed out at about $21.80, and for the purposes of showing discipline, I took profits at different levels because I wanted to show that as the price is going up, you want to bank in, because it's not a guaranteed play, right? For every dollar that a stock goes up, it's less likely that it's going to go up another dollar. And because we hit 100% by the end of it, and many team players made more than us, it was a great opportunity for us to understand different concepts like buying the dip, understanding different levels in Fibonacci, trusting fundamentals, and really staying strong by your position. That discipline is something that only comes with time and really needs to be practiced. So in the grand scheme of things, we're very happy with how Clov turned out. Sure, we got lucky with how Wall Street Bets pumped it, but we still believe that eventually it would have reached there anyways. It just so happens that they found exactly what we did and happened to pump it, which helped us out in the great run. So with that, if we've misspoken in any way during this video, I do humbly apologize. Hopefully this video was educational. Hopefully there was some value to you. If this video was helpful in any way to you, I would kindly request that you subscribe and like the video. It means everything to us, and it only takes 15 seconds out of your day. With that, keep learning, keep loving, and keep growing, and have a wonderful day.